Hello everyone and welcome to Momentum channel. My name is Mo, and in this video, I'll be sharing with you 4 different high quality stocks or ETFs that I plan to buy in the stock market in the week ahead. Let's get into it. The very first stock that we plan to buy in the stock market in the week ahead is Verizon. It's a communication sector stock with a very safe dividend score of 87. And currently, given how the stock price for Verizon gone down quite extensively, it is having one of its higher dividend yields at over 5%, which is just remarkable. Last trading price for Verizon was at $50.96. Verizon has a very low volatility of only 0.27 beta score, which suggests a lot less volatility than the overall stock market when it comes to its stock price. In terms of its dividend payout ratio, we are looking at 47%, both current and forward payout ratio, which is considered very low for telecoms sector businesses, giving them a lot of room and availability to continue to increase their dividend payment. In fact, Verizon has been paying its dividend uninterrupted for the past 31 years. And in the last 15 years of those, they've been increasing it year after year. They do pay their dividend quarterly in the months of February, May, August, and November. Currently, they have an annual payout of $2.56 per share. As for the forward price to earnings ratio of Verizon, we are looking at 9.4, which is a lot less than its own 5-year average of 11.7. What's more, their dividend yield currently has 5.02% is about 13% above their 5-year average, which historically, based on the 5-year average, is at 4.45%, suggesting that now could be potentially a good time to buy shares of Verizon and taking advantage of this high dividend yield that you're getting. What's interesting is that the last trading price of $50.96 is hovering a little bit closer to the 52-week low price, and their highest price in the past 1 year was at $56.55, while its lowest price was at $46.23. In terms of the earnings per share adjusted, you noticed in the last 12 months, they had earnings of $5.44 per share. And in the next 12 months, they're expected to have $5.45 EPS, which is decent in that sense. As for their total sales, for the most part, they are showing an upward trend, with the last 12 months showcasing $134 billion in total sales. Ideally, for a business, we would like to see them continuing over time, increasing their earnings and also increasing their sales. Our second pick for the stocks to buy in the week ahead is a company in information technology. It's a semiconductor business, Skyworks Solution. It does pay a dividend as well, although it's a growth stock with a dividend yield of 2.29%, which makes it quite ideal for a growth stock that does pay such a high dividend. Really, one of the main reasons that the dividend yield is quite high is that Skyworks Solution is currently trading at much lower prices compared to its 52-week range. Its last trading price was at $98.03, although it was up by 4% in the last trading day. Still, if you look at it in the 52-week 1-year price range, they are hovering very close to that 52-week low. The lowest that they hit in the past 1 year was at $89.75, whereas the highest price they had in the past 1 year was at $196.67. All in all, resulting in a dividend yield that currently is 60% above their own 5-year average. Probably is one of the best times for investors in growth stocks that believe in the quality of the Skyworks Solution and want to still take advantage of this kind of abnormal high dividend yield and want to lock it down. And this might be perhaps your chance. Of course, be sure to do your own due diligence and research before buying Skyworks Solution or any other stock for that matter. Here, this purpose of this video is really for entertainment, and we are talking about our own approach to investing and why we are planning to go through with some of our purchase decisions. It's again a personal decision, and you have to do your own research. Looking at the forward price to earnings ratio for Skyworks Solution, it's at 8.4, only 8.4, which is a lot less than their own 5-year average of 14.2. Again, suggesting this could be one of the lowest valuation in the past 5 years, if you look at it, that you could be picking up this stock at these valuations. As for the earnings per share, in the last 12 months, they have shown $10.50 in terms of earnings. And for the next 12 months, they're expected to show 11.6 earnings per share. So even growing there as well. Similar story for their total sales. For the most part, over the long span of time, you're seeing that upward trend with the last 12 months showing $5.27 billion in total sales. And the best part that I also like is that they are continuing to buy back their shares, with the last 12 months only showing 166 million outstanding shares compared to 10 years ago where it was at 192 million outstanding shares. That's always a good sign for investors to see. Looking at the dividend details for Skyworks Solution, you're looking at a payout ratio of 21% currently, and forward payout ratio of even lower at 19%, which is considered low for semiconductor firms, giving them a ton of opportunity and room for increasing their dividend as quickly as possible, which is showcased here by dividend growth space. In fact, the last time they increased it was in July of 2021, where they increased their dividend by 12%. In the last 5 years, they have increased it by average of 14% per year. Skyworks Solution has been paying its dividend for the past 7 years, and in all of those years, they have been increasing year after year. They are paying their dividend quarterly in the months of March, June, September, and December, and currently have an annual payout of $2.24. The next pick for us is Royal Bank of Canada. It's just a financial sector business. It's actually the largest Canadian bank with a currently dividend yield of 4.14%. It has a dividend safety score of 80 and was last traded at the price of $96.48 in US dollars. Royal Bank of Canada, obviously, as the name suggests, is available in Canadian dollars for Canadian investors on Toronto Stock Exchange with similar ticker symbols of RY. Here we are looking at the details of this stock from a US dollars perspective, just so that it's more apples to apples comparison. It has a low beta of 0.63, suggesting less volatility for this stock. Royal Banks currently has a payout ratio of 39%, but for the forward payout ratio, we are looking at 44%, which is edging slightly higher for the banks. That being said, though, they have been increasing their dividend for the past 11 years, year after year, and they have paid their dividend uninterrupted for the past 27 years. Last time they increased their dividend goes back to May of 2022, whereby they increased it by 6.7%. Royal Bank currently pays its dividend quarterly, and it has an annual payout of $4 per share, with dividends being paid on the months of February, May, August, and November. Looking at the forward price to earnings ratio for Royal Bank of Canada, which is at 10.7, it is less than their own 5-year average of 11.3. And if you look at the 52-week price range, really they're hovering very, very close to their 52-week low price, one of their lower prices that they've had in the past 1 year, which we saw a low price of $94.97 USD and the highest being at $118.79, suggesting again the stock looking reasonably valued and could be a good option for dividend investors. As for their earnings per share, in the last 12 months, they showed $11.60. And for the next 12 months, they're expected to have $11.30 earnings per share. Slightly lower, but still within that $11 kind of range. As for their total sales, you're seeing overall a nice upward trend, with the last 12 months showing $50.4 billion in total sales. Similar story to Skyworks Solution. You're seeing, for the most part, they're having share buybacks with currently 1.42 billion outstanding shares, which is less than that of 10 years ago. Lastly, our fourth and final pick is an ETF in Canadian dollars, iShares Core MSCI Canadian Quality Dividend Index ETF, XDIV. It is currently traded at the price of $23.73. For year to date, this ETF shows to be down by close to 3.5%. The reason XDIV is one of our favorite picks when it comes to passive investing in dividend stocks is that it gives you exposure to a low-cost portfolio of Canadian stocks with above-average dividend yields. And the fact that currently this ETF has really been trading at much lower price valuation, it has resulted in much higher distribution yield, with the 12 months trading yield showing at upwards of 4%, 4.08%. And the distribution yield, if you look at it based on an annual yield, you're looking at 4.28%. This is the annual yield that an investor would receive if the most recent fund distribution stayed the same going forward. As for XDIV, they do pay their dividends on a monthly basis, and they do rebalance their portfolio semi-annually. They are offering also a dividend reinvestment plan, which is good. They have a low fee of only 0.11%, which means if you invest $10,000, you will be paying a fee of $11 in 1 year. It has a medium risk overall, and if you look at all holdings, you're getting exposure to about, give or take, 22 different holdings, with the top ones being Royal Bank of Canada, Manulife Financial Corporation, Sun Life Financial, Bank of Nova Scotia, Fortis, Toronto Dominion, Rogers Communication, Restaurant Brands International, Shaw Communications, and Emera. You have a number of other names as well, as you see here on the list that we've shown you here. In terms of the exposure breakdown by sectors, the biggest exposure is to financial sector, followed by utilities, communication, consumer discretionary, and energy. Are you currently invested in any of these stocks? Let us know in the comment section down below. We'd love to hear from you. Please let us know down below which stocks or ETFs are you planning to add to your portfolio in the week ahead. Well, thank you so much, everyone, for watching this video until the end with Nellie. I hope you found this beneficial and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in high dividend quality stocks, growth stocks, penny stocks. We also talk about investing in crypto and ways to reach financial freedom. With that, thank you so much. Nellie and I will say bye to you. See you next time.